Good afternoon, traders. It is 5:08 p.m., November 25th. It's Wednesday. I did decide to take a couple of trades in the aftermarket. I didn't get to record them because I had a meeting going on in the background. So I'm just going to try to go over them real quick. But I just want to say, so these are the two trades right here. And this month for me, beside locking down my plan and my strategy, has been also about identifying times when I should be taking trades and times when I shouldn't be taking trades, just in general. And a time when I shouldn't be taking trades is when I have a meeting going on in the background, that's for sure. I kind of did that out of boredom. Anytime you take a trade out of boredom, it's not a good idea. And so that's what I'm blaming for this loss. I mean, partially. To be honest, the setup that I took was okay. Let's look at it right now. So SYBX. I mean, if you kind of look at it in a vacuum, it was pretty good because basically it was on the top gainers list of the aftermarket, and the reason why was because it was running up right after the close of the market, and I did see this big run up. At the time that I opened this up, I'm not saying I saw this when it happened, but you can see there was a huge insurgence of buyers and drove the price up quite a lot, almost $2 here, or almost 100% from where it was over here. And then the one thing that I didn't really pay much attention to was the fact that after it consolidated, if this thing was really strong, what it would have done after this big run up was, after consolidation, it would have had another run to the upside, but instead it sold off. So then when the aftermarket opened, people started buying it, I guess trying to catch, another run to the upside, which is an okay move, but it's not really one that I care to take. I'd rather, get in on the move out of consolidation instead of trying to get in after a sell-off. So what I did, instead of jumping in over here, which I do sometimes, but that messed me up earlier today, and it's really not, I think, like a good long-term strategy, because anytime you get in front of one of these big green candles, even if you're getting in on the second one or third one, the one or two times that the trade goes against you, your loss could be really, really big. Because let's say, for example, I bought for the break of this candle here, it would be my entry would be around the 250 mark, and this is here, it's only like a 10 or 12 cent stop, but still that's pretty big. I'd rather it be closer to 5 cents. And sometimes you get in after a big green candle and it's a 20 or 30 cent stop. So it's always better to get in after a pullback as far as keeping your stop tighter. And that's what I did here. I was essentially playing this like an ABCD pattern, and this would be point A, this would be point B, and then C is during the pullback. And the idea is to get in when the first 1 minute candle breaks a new high, and then hopefully the thing runs back up, which was probably a lot more likely to happen if it weren't for this huge sell-off here. So anyway, you could see what happened. I got in on this candle as soon as it broke, and then my stop loss was the low of this candle, I believe, or the low of the previous candle. I'm not 100% sure. But anyway, as soon as this thing broke down, I got out. So, I got out really quick, so I didn't feel the effect of this full flush. I had I think 11 shares or something, or maybe 8 shares. I think it was 8 shares. So that was this 58 cent loss. So it could have been a lot worse, if I would have held. But again, I shouldn't have been trading because I was distracted in the background, and that's something I'm going to stop doing that. So anyway, that was that one. And then the next one was Vstm, which also popped up on the top gainers list. Now, this was a really weird trade. And again, it was my fault for trying to trade while I have other stuff going on in the background. For whatever reason, when I went to the markets page and then put this on my watch list, and then when I came back over to this page, it didn't look like this, and I didn't realize what had happened right away. Every single chart was on the 5-minute chart. That happens once in a blue moon. I've seen that happen a few times with Webull. So anyway, the pattern that I was looking at, which I thought was a 1-minute pattern, was not. And this was a time where I did get in during the like the front side run, because these candles looked pretty small, and they actually were. Like the range of the candles were pretty small. So I said, you know what, I'm gonna get in for the break of this candle. And look, this is only a 5-cent candle, so I thought that's perfect. That's a very reasonable stop, even though I'm getting in on the front side. It's not very risky because my stop is very close. So I get in there, and then what ends up happening is the price just chops around. This didn't happen till way later. The price is chopping around. I'm not seeing new candles form. Minutes are going by and it's still in the same candle. And I finally realized, wait a minute, all of my charts switched to 5 minutes for some reason. So then the thing like popped up a little bit, and I just sold out because, you know, whenever there's some like weird thing going on in the trade, I just want to get out because I don't really, basically my entry is invalid at that point because I entered thinking this was a 1 minute chart. And, you know, I'm trying to get, you know, a 1 minute exit planned. But how can you plan an exit on the 1 minute chart when you're looking at the 5 minute chart, right? When I switched to the 1 minute chart, and let's just double check here where that started at. This candle started, I think it's at 411. Should be pretty easy to spot where my entry was. Yeah, right. It looks like I probably entered, so the high was 176 here. I probably entered over here. And as soon as I switched to the 1 minute chart, I'm seeing all this stuff. I would have never ever taken a trade if I knew the chart looked like this. These dash candles, I avoid stocks like the plague when I see that, because that means there's no volume. So I would not have traded this thing. And you can see, like, look at this. I mean, there's no really reason to get in on a trade when you see it like this. But I was looking at this thinking this was the 1 minute chart. So anyway, my entry was right here. And then you can see what happened. This thing like popped up. I actually had a limit order in for a 1R sell, which was at 185. It shot up to 185, but came right back down in a split second and, you know, didn't fill my order. I might have been in actually 184 to sell, but it just did one of these kind of things, so it didn't sell. And then you know, it just chopped around near my entry. And once I noticed, you know, these new candles aren't forming, you know, I started selling off, you know, like half my share size, and then I flipped to to realize what was going on, flipped back to my 1 minute chart, and you know, and then I sold the rest like somewhere around here. So it was in at 177. I sold half at 180, which you know, I should have waited until it hit 184. But again, that was, you know, that whole thing I just told you about, and the fact that I shouldn't be trading this, you know, while I have a meeting in the background. And then the final remaining shares I sold at 181 just because, you know, I realized, whoa, this whole trade is messed up because I bought on the 5 minute chart thinking it was a 1 minute chart. And then of course, like I think I flipped to my account screen and then came right back, and then the candle shot way up, right? But I mean, this wasn't an entry I was supposed to be in anyway, so it doesn't really matter. But I mean, it did sell off after that too, so you know, at least I got out with some profit on that. So anyway, the total profit on that trade was 35 cents. You know, for a $20 trade, that's not bad. But again, I you know, lost too much on the first trade, and I mean, all this trading shouldn't have happened anyway. And I turned my small green day into a small red day. At least it's not a big red day, but like I said, this whole month has been me kind of nailing down this strategy and refining it. And one of the things that you know, I'm noticing is just not really worth the risk that I'm taking is taking these aftermarket trades when I have these meetings going on in the background. So I'm going to stop doing that. I'll still take aftermarket trades, but just when I can focus on them 100%, when I don't have a meeting. And this is really my first month, including the end of October, that I've been trading heavily in the aftermarket. I just took a few trades before once in a while in the aftermarket. So this was really, you know, like building experience. You know, what is the aftermarket like? What kind of opportunities does it present? That kind of thing. So at least I'm getting experience, you know, but I'm taking some losses that I don't need to be taking. But I think that's what next month is going to be about, is going to be, you know, now that I've figured out certain things that are almost guaranteed to cause me problems, to cause me losses that I don't need to take. Next month is going to be all about not doing that stuff. So that you can see, here's my trading plan. I've been updating it. I'll give you guys like a full update, probably at 200 subs. But yeah, so you see, I have already my December plans starting out. You know, I added this: don't take any trades, like aftermarket trades, unless you can give them your full attention because of what happened today. And there have been issues in the past because of that. So yeah, things like that I think are really going to help improve this strategy. Luckily, I'm still in the green. I'm almost done with a month. Hopefully, I can stay in the green for the rest of the month. Maybe add to it a little bit. That'd be nice. But either way, as long as I can end the month green, this was like a great month to practice and learn this strategy and hone it in and all that kind of good stuff. So anyway, that's it for me for today. Tomorrow's Thanksgiving. Happy Thanksgiving, everybody. No trading tomorrow. Maybe on Friday. Friday's a short day. But the markets will open at 4 a.m. in the pre-market, and they'll be closing at 1 p.m. So if I see a good setup, a good opportunity, I will take a trade. So I will see you guys probably on Friday. Once again, happy Thanksgiving, and stay safe.